Okay, Chris. So we've seen some pretty incredible moves with flash crashes. We've seen mini flash crashes, and a lot of people are blaming hedge funds, HFT in particular, automated trading, liquidity getting sucked out of the market, just no bid in the market, people not wanting to make a market. Now, there's a distinct distinction between HFT and automation, but we're starting to see now that for your average retail client, Pepperstone client, we have now got access to some kind of automation tools, and this is only getting bigger and bigger and bigger and bigger and bigger. What's your take on automation as a trader? Do you think if there's any mileage in it? Do you think we go after the human element, or do you think that we can leverage on automation?
Yeah, I mean, we've seen an explosion in people looking to automate strategies, and I think you're absolutely right to point out that there is a major difference in the degree of algorithmic trading that goes on. There are thousands and thousands and thousands of different algorithms trying to achieve different things, from best execution to tracking VWAP to trying to front run orders or do whatever they're trying to do. But for our clients, automating a strategy, it can be very simple indeed. It's probably why MT4 has grown in popularity above pretty much any other reason, is the ability to automate strategies, but then also be able to create add-ons which you can place onto your chart. If you're with a provider who has their own proprietary software, to create new tools can take some time. But to be able to create new tools for MT4, MT5 and CTrader is actually something that you can do yourself, or buy something off the shelf and do it that achieves a certain objectives. In terms of the automation of strategy, I think one of the things that's why that's grown in popularity, people having like say a technical strategy or some other type of strategy like that, and being able to then automate it, is people find it very hard to control the emotional side of things. We go into each trade understanding how much risk we want to take on, but we also know that we have to hit a certain target, ideally, and potentially even overrun that target. And that means we don't have to be right every single time, which of course we are bred to be as human beings. We're told we have to be right every time. Unfortunately, it's never the case. But I think, to be able to take the emotion out of trading is such an advantage for retail traders who, get caught up in the news, get caught up in the idea that I have to be a winner. Therefore, as soon as price starts rolling over, they take it off the table. And then they look back and then they see the prices continues to go higher. So to take the emotion out, being able to not get affected by news, is why we have seen the amount of flow that we see on a daily basis getting executed by expert advisors and what we call automated trading, systematic trading, around sort of 45%, give and take. So it's a large part of our flow. I think I expect this to increase as technology increases, as people be able to pull sources and trade off Excel and pull through APIs and do different crazy things. The youth of today are coming up. They're learning to code at young ages, and that's just going to increase their ability to do these sort of things. But at the moment, I think probably the main advantage is that, one, you can back test a lot of these strategies, so you can see if you've got a statistical edge over a certain time frame or a cycle, and multiple products, and test the robustness of the strategy. But also the ability to take the emotion out of that trading. For a lot of retail traders who find that so hard, can be incredibly advantageous.
Yeah, it's only getting bigger, isn't it? It's a great growth area, and something I guess that. Also, you have to be stuck in front of the screen as well. If you've got an intraday strategy, it's trading 4 or 5 times a day. Let's say like a mean reversion, someone codes up your brain, does your mean reversion strategies you've got, and they're kind of intraday basis. Then they can just come in the day and see how they performed and have some risk structures in place and stuff. So I think it's great, and we'll see how it goes from that.
That's an incredibly good point, because. For me, we can't be in front of the screens 24 hours a day. We tend to look at one time zone, whether it's going to be Asia, whether it's going to be UK, European trade, or whether we're trading into US trade. We're not going to trade all 3 time zones. We might trade 2 if you're really pushing it, but you don't want to be in front of the screens all the time, especially if you're running those high volume trades like scalping, for example. Let the system do the hard work for you, but backtest to make sure you've got a statistical edge and do that for you. So. We don't want to be in front of the screens the whole time. We don't want to be a slave to the market. We have families to raise. We have other jobs to do. And so an algorithm will, as you rightly point out, will achieve that situation. I think what is also interesting is with MT4, MT5, MT Trader is what we've seen over time is people, buying an off-the-shelf expert advisor because it tells you it's going to do something, and then actually looking at the coding that's behind that and tweaking it and optimizing it themselves. And I think what we've seen then is a migration from people learning how to do that sort of stuff. They don't necessarily want to buy it off the shelf, but they've now got into this idea about coding themselves and being able to sort of use their own indicators and using that logic to code it themselves and going from there. And some of the people who now make like really good consistent profits have gone from that road of buying an off-the-shelf expert advisor and then tweaking it and then actually just learning how to code themselves and going through those roads.